Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Asian session live market analysis on 22nd of August between 5 and 5:30 GMT. So we track the market using the live market code page. I go on the link for the same. You can open it in a browser and we will analyze the market. Now you should be able to see the live market code page. Currently, Euro is trading around 1.4367, 1.4369, 1.4362 is the low, 1.4392 is the high, 28 pips negative net change is seen. But in the case of GBP, we come across 19 pips positive net change. It is trading around 1.6482, 1.6486, and 1.6462 is the low, 1.6508 is the high. Now on Friday, during the US session, they made a very quick rise in the case of Euro and GBP went up to 1.66 area and suddenly melted down and came down to 1.6432 area, and then it has gained nominally to a close. Today they made a brief upward move in the case of GBP, but Euro did not gain above the 1.44 and started making the slide. So, on Friday, Euro GBP went up to 0.8750 area. From there, it has started making a drop. Once GBP went up to 1.66 and Euro was holding around 1.44, they just made the reversal in the case of Euro GBP and started making the drop. And currently, you find from the Friday close, Euro GBP is trading around 27 pips. So, Friday quick rise and drop indicate that they have done the extended upward swap in the case of GBP and a nominal upward swap in the case of Euro in order to make further drop in the case of Euro and GBP. And also in the case of USD CHF and the Canadian dollar, they made a downward move quickly and recovered all. Currently, you find USD CHF is about 4 pips positive net change. And USD yen also, they came down to below 76, 75.93 and then went up. So currently you come across USD yen is trading around 76.71, 76.74, 76.57 is the low, 76.19 is the high. So 19 pips positive net change. So when GBP is showing positive net change, USD yen is also showing positive net change. As a result, GBP yen has gained about 43 pips when compared to the Euro yen, which has gained about 32 pips. So you find that they are making the contrarian move. And there is also very evidential when you look into the commodity pairs. So USD CAD is trading around 98.90, 98.94, 98.80 is the low, 99.70 is the high, 8 pips negative net change. Australian dollar is trading below that of 1.04. It went up to 1.0440. On Friday, it came down to 1.0343 and then went up. And 1.0397, 1.0400 at the current level, 1.0364 is low, 1.0440 is the high, 10 pips negative net change seen. So Canadian dollar and Australian dollar are showing negative net change, indicating that they are making the contrarian move with regard to the majors as well as the commodity pairs. So they are handling the process to start with. So that shows that market has got uncertainty and the traders are just waiting for specific clues from the other market, either based on fundamentals or on technicals. Then they want to make the commitments. So before that, the players are handling the process in thin volume conditions, making a drop in the case of Euro, making a slight firming up in the case of GBP, firming up in the case of USD yen, and firming up in the case of USD CHF, making a dip in the case of USD CAD and Australian dollar. So these are all the current scenarios we come across in the market. Let me display the camera over that of the PowerPoint presentation. So expected market moves for today. So Japanese session swing and firm up moves are expected. So even though they are making a small dip now, they may make a small firming up towards close of the Japanese session. And afterwards, European session, small firming up and a drop could be seen, and swing and firm up moves could be seen during that of the US session. In case if they firm up during that of the Japanese session, late Japanese session, early European session, and US session, late US session, then we could see that big beginning false move of rise. So if they are not rising today, then we could come across more drop from that of tomorrow. So let us, the expected market moves in this particular week. You know that last week they made some volatile moves, a quick drop and a quick rise and things like that. They have built the sell positions, and this week they are expected to make more visible drop in the case of Euro and GBP, and we could come across significant gains in the case of USD CHF and also Canadian dollar, and Australian dollar is expected to make very good draw. So let us see how exactly the market could behave during the rest of the days in the week. So today is 22nd, so the market is expected to make the week beginning false move, little bit firming up or just hovering around the current levels with a little bit of either way volatile moves. Then tomorrow, from that of the European session, after a brief upward stop and during that of the Japanese session, from the European session, Euro and GBP are expected to make a very quick draw, and then people will say that the market sentiment is changed. Then on Wednesday, again from the European session, the market is expected to make further drop, and probably a little bit of Japanese session coming up moves could be seen on Wednesday, and during that US session there could be visible drops happening in the case of Euro and GBP. All the forecast I am referring to the numerator currencies. The opposite is expected to happen in the case of the denominator currencies. Then on Thursday there will be a possibility of gaining levels in order to attract the traders, those who have gone short, to keep the buy orders. And on Friday, 26th, we could come across more drop happening in the market. But on US session, Friday US session, there could be a quick gain in order to induce the short sellers, those who have not done the covering of the shorts, to do the short covering. So till early US session on Friday, there could be a drop, and afterwards a reversal could happen in a nominal way. Then the next week onwards, we will come across more risk aversion moves to happen in the market, and people might be talking that various attributes could be given, but before that, the players have gained the level substantially last week and build the sell positions, and also this sort of wide range moves, what they had done it last week, that is dropping initially and making a gain and again dropping it, is nothing but they try to build the sell position, drop the market and buy again and gain the level to sell. So what happens with the profit, what they earned in the earlier sell and buy trade will be added to the top of the fresh sell, so that their average sell level will be above that of the market. This is a strategy they do it after the higher level consolidation, the wide range swings, and then drop. And if you call it as a bullish market, Euro could go to 1.47, GBP could go to 1.67. Okay, fine. There are also views. We have to actually wait and see how exactly the market is going to show us the hidden agenda. Then with regard to the initial lows and the highs, Euro formed the low 1.64362, which is not breached, and currently holding near that of 1.463. And the high was 1.4392, which is also not breached. In GBP, 1.6462 is not breached, 1.6508 is also not breached, but holding closer to the low. Probably they could make a downward stop around 5:30 GMT or 6 GMT, and then quickly gain the levels towards close. Or probably during the gap time, they may gain and make a nominal gain during the early European session, and then start making the slide. So we have to see how far they are able to effectively gain the levels In case if they are not gaining the levels, understand that they are already built the sell positions. Traders are holding long positions. When the traders hold a higher level long positions after doing the short covering, the players avoid gaining the levels in order so that they avoid giving profit for such long holders. So this we need to understand. The forecast says that there could be a gain. They are not gaining it. That means the traders are holding high level long position and they do not want the high level long holders to book profit. Only then when they drop the high level long position holders to come for long liquidation. In case the firming up becomes a rise, then understand that the traders quickly cut their long position and turn short. So when the traders turn short, immediately the players buy those sell positions and then subsequently gain and hit their stops and also induce them to do the short covering before making a drop. So alternatively, they gain and drop the levels in the market in order to earn. It is not that they wanted to gain more levels in the case of Euro or GBP or drop more levels. That is not their intention at all. By doing such methods of moves, they are able to earn. So they are focused on their earning. So if you also focus on the earning, then we will be able to easily perceive the market moves. And if you become bullish or bearish, then it is very difficult to change our mindset. By the time we desire to change our mindset, market will have reversed. So there is a saying in the market, when the strongest bull turns bearish, the market reverses and start gaining again. So that should not happen. So that is why I want the traders to maintain the neutrality and try to perceive whether the players are selling or players are buying and try to trade along with them. In the case of USD/CHF, 78.49 was the initial low, but they breached the low and formed 78.41, but come about it of 78.49. So a brief downward stop is seen, and afterwards they are just gained only about 6 pips. So 6 pips positive net change, and slowly they are expected to gain the levels during this particular week. So they have made a brief downward stop and the high is in. And in the case of USDN, 76.57 and 77.19 intact. And on Friday they came below that of 76, quickly reversed it and went up to 77 and hit the stops and come down to the middle level. So they are expected to make some more panic creating drop in the case of USDN. Still it is not ruled out. So let us wait and see. And in the case of Australian dollar, 1.0364 was the initial low, which is not being reached. 1.0440 is the high, as the initial high. But you come across 14 pips negative net change. It is below that of 1.04, the psychological level. Still they have not reached the low. So there is a potential that they could make an upward stop and then make a draw. In the case of Canadian dollar, 98.80 was the low, which is intact. Currently it is trading around 98.90, 98.94, and the high is 99.17, which is also not reached. So you come across a narrow range spread in the case of Canadian dollar, the case of yen, and also CHF. But in the case of euro and euro, then the spread is very nominal, and also in the case of GBP, very nominal spread. Only in the case of Australian dollar, about 100 pips spread, almost around 100 pips spread, they have made it because the Australian market is very active. That is why they have made either way stop ins in the case of Australian dollar. And you could come across that Australian dollar start losing the levels during this particular week ahead of other majors. So let me just minimize the PowerPoint presentation. Focus the camera over the live market quote page and take up the questions which are asked here. I'm sorry that there was a echoing in the beginning. I think now it should be all right. Okay. There's a first question, Matthew. View on USD/CHF. If you watch carefully USD/CHF, they came down as a downward stop into that of 0.77 and quickly gained the levels. So around 0.78 they wanted to hold, and in case if they want to make a downward stop, and they may make only a brief downward stop, and afterwards they are expected to go quickly above the 0.80 and 0.83. They could halt and again make a either way move from the 0.83 and then further take it up. And you'll find that recovery moves could be very, very fast in the case of USD CHF because already they have done the downward stop at a phenomenal level to 0.71. So they are expected to aggressively gain the levels in the case of USD CHF. And at that time, they might be holding Euro and GBP in order to gain the levels in the case of Euro CHF. That where they are doing the downward stop now in order to aggressively gain to 1.15. And probably they could gain to that 1.20 area very soon. So how they will do it? They will quickly gain more first in exchange about 150, 180 and things like that. They can do up to a potential of 200 pips in a given day, other than the exceptional days or the extraordinary days. Other times, Euro might be making a slow drop, like about 20, 30 pips drop, etc. But CHF could be gaining about 180, 100, 200 pips. So that way they will be able to gain the levels in the case of Euro CHF, but also GBP CHF. Alternatively, they could make moves in the case of Euro and GBP in order to handle Euro GBP as well. So Euro GBP, you will notice they gained the levels first on Friday, then subsequently they gained the levels in the case of GBP and reversed Euro GBP. That is how they do it during the session. Induce the short sellers to do the short covering and later on. So this we have to keep it in mind. This is very essential. Now in the case of Euro, they just breached the low by 1 pip. So USD CHF is expected to gain substantially the levels after 2 weeks of consolidation. Then Matthew, any possibility of gold coming down? Gold is undergoing the multi-year reversal now. So they are expected to make the week beginning false move gain today, and probably they may drop again by month end because it is mostly a futures market. So they could do the upward squeeze for the future holders, and probably will come across more visible drop happening in the case of gold from next month. So till such time you have to bear with that, and they could make very quick pump and dump move and very quick gains, show new highs and that sort of thing. That is the phenomenon you come across during multi-year moves. So what you have seen in the case of CHF and what you have seen in the case of Australian dollar, they could show it in the case of gold. How Australian dollar, they showed 1.10 in a matter of 3-4 days, they showed below parity and then went up to 1.05 and then come down. So this is how they are expected to make very big volatile moves in the case of gold. Silver, already they have done it, to rising to 48 area, and they are expected to gain nominally in order to keep the bullish field. But they are aggressively cutting the loan by pip still. They are not making a quick drop. They cut 1 pip and not gaining the levels, then that means traders are building long positions at a higher level, or done the short covering already, keeping to enter long when it comes to 43, 50 and things. And because when predominant of the traders desire to buy here, then you know that they make a downward stop and hit their stops, only then they gain. And they are not going to give easily the profit for that of the buyers or the sellers so easily. And you have to keep that in mind. And only when there is a quick move, a quick rise, if you try to take a sell, quick drop, if you try to take a buy, you will be able to see the possibility of keeping stop at entry. So risk management is part of this trading, and it is not simply the forecast alone is going to help. You have to use all the trading strategy to limit the risk and maximize the profit by keeping initially stop at entry, buy or a sell position, and try to trail it and keep a limit, estimating the low or the new low or the pivot point, whatever it is, and resistance, support, etc. And then try to trade using a trailing stop. Blindly, if you try to take positions and thinking that it has to respect chart, it will not. Then you look for some other jobs, look for some other statistical calculations. Use trading strategy, any type of analysis you can use. Any possibility of revisit GPP to 1.66 or 60, I'm not very sure what he is asking. GBP is expected to come to 1.60 and below 1.5 during the course of this particular week and the next month. You advise about USD INR and the Euro INR. They are expected to, USD INR is expected to weaken against USD and also against Euro during the course of this particular month and next month. So, against USD, it could go to about 46.50 area. I'm holding sell position Australian dollar 1.0265 since last week. Beginning should have closed it on date. I think come closer to that. Probably you can just keep a hedging order above that of the market to trail it down so that you will be limiting the risk and keep hedging order 30 pips above the market. And when they drop quickly, you trail it down and reduce the spread between the sell and the current market level. And once the position makes profit, keep stop it and try to get profit during this particular week. KK, Euro to sell when format was during that. Yes. And when I say that, it might appear that I am giving a misguidance, but later on you might see that Euro dropping. Probably a day or two they may hold it at a higher level, and immediately if you think that the forecast is wrong, things will be different. I totally agree on that because you are trading with your equity. And later on you might see that the forecast is really happening. So a forecast is a one which is supposed to give the long-term view as well as the short-term view. And so I'm focusing on that. I'm trying to give the forecast and always keep it in mind that the statistical calculations can go wrong or get delayed. There are so many other error factors associated. So you have to necessarily use the trading strategy to limit the risk. Use the stop or the hedging order to limit the risk. You don't take undue risk. If you want to do position trade, plan it beforehand, keep adequate usable margin, and try to spread the risk by taking a very minimal position. That way you can do it without a stop. But simply taking about 4-5 logs and say that I am position trader and I am not going to keep stop, then probably your equity might erode when the market goes against you intraday. Then you might feel like cutting the positions. Avoid over trading. Market continues to give the trading opportunity. And always you can take additional positions. You know that whenever you are taking 3 lots or 5 lots position, you see that the market is not immediately giving profit for you. So if that is the scenario, if you are capable of taking about 3 lots, you try to take 1 lot and see how far it is performing. If you are able to keep stop at entry in that particular sell or a buy position, then take another sell position. Let it be even lower level, doesn't matter. Because ultimately, we need to earn money out of that particular trade. So it is not that Euro selling only above 1.44 is going to yield the profit. Even you can sell it around 1.4359 in case if there is immediate drop potential. So what is more important for us is whether you are earning 50 pips or 60 pips or 100 pips and not the levels. Because you are focusing more on the levels, you find invariably the market gives a surplus. You always focus on your profit earning potential in your trades. Euro slow slide pip by pip intentional move. Yes, it is an intentional move when they cut the low by pip and stay below that of the initial low. That is very important. If they stay below that of the initial low for more than 30 minutes, then only in the next session they can make an upward move and grow. Okay, around 1.66. See, the way they have shown 1.66 started making a big drop of 150 pips to 1.60 indicates that they have only made an extended upward stop and before. So in such a scenario, if somebody has done a buy at 1.65 or 1.6, they are not going to give immediately the profit. See, always keep in mind in a rising market, if you try to buy and get struck, they don't give profit immediately. Simply taking a sell after that drop, they don't give the profit booking opportunity very quickly. In a rising market, if you sell, probably if you wait for a day, they may give profit. In a dropping market, if you buy, if you wait for a day, they may give profit. But if you do opposite, emotional traders are the one they target. So they are not going to give profit so easily. Then, do you see USD strengthening against Singapore dollar? Yeah, there is a likely chance Singapore dollar is expected to weaken similar to the other regional currencies. And USD is expected to be the winner by end of this month and next month. Then you will be able to understand. But we may call it as a risk aversion move or it is a safe haven strategy, whatever the terminology they use. But ultimately, as a trader, what we need is whether Euro and GBP are going to drop or Euro and GBP are going to rise. They are all the two questions are to be answered by any forecast in market. Can you tell me what exactly intervention means? Okay, intervention is a mechanism by which whenever there is a drop in any of the currencies, they find, in the case of denominator currency, and we have seen USD, the respective government, for example, SMB was supposed to intervene in the market and keep big buy orders and try to buy it aggressively in the market, gain about 300 to 1,000. And invariably you find such interventions happen, but they don't sustain. So now people are really questioning what is intervention. Because in the case of yen also they made the intervention, gained the levels, and then 80 was considered as a support, 81 was considered as a support, but subsequently the government, they themselves distributed their positions back into the other market. So automatically the market started to fall. So what is more important for us is if the traders are all long, the players could make a very drastic drop, like in the case of CHI, how they have done it. Then of course the intervention story may come, but it's not going to help us. Because once we are stopped out or once the margin call happens, the intervention story might come. So it may not be of real help. So always keep in mind that intervention is not mainly to help the traders. And they are trying to just adjust the levels for the currency converters. And they say that pegging, etc. And we have seen several times the intervention stories are short-lived like any other speech or the data release, etc. Ultimately, if the traders are freely selling here, then you will find USD is not going to drop. If the traders started buying here again, then probably they may do a stop. And if the traders do not keep a stop, then they could make an extended downward move and then gain. But how we avoid such things? For that, we go in for the forecast. Still, the risk can be unlimited. So the best thing is don't take such unlimited risk. Instead, keep hedging order to limit the risk. Correct. What about JPY INR, the downside? Is it INR? JPY is expected to make a downward stop. Probably they may show 75 and then go up, or 74 and go up quickly for a day. Normally they do such moves either during the Japanese session or US session, not during the European session. So look for such moves either today, tomorrow, anytime they may do it. And a week before they had done it in the case of CHF. Last week they are supposed to do, they have not done it, probably the volume was not very much. So this week they could do it. When Euro and GBP are dropping, they could suddenly drop USD yen and drop all the end process and then reverse it in one go. And probably they can use the intervention story again. Then flatfish. Do you think the players will hold market till Jackson Hole speaks to trigger large moves? So it is not that the players hold the market. It is a question of traders not entering into the market. The traders are not entering into the market in an aggressive way or at least a nominal volume. There is no point in making big moves. There are two times the players make big moves. One is in order to attract the traders, they make big moves. So that some find the value picking in certain levels and some find the profit booking opportunity at a higher level. So that way they just attract the traders. Then once the traders commit their positions, they widen their swings and hit the stops. So this is how they bring in the volatility in the market or big moves in the market to attract traders as well as once the traders have committed more positions. So we have to find out whether it is just the attracting the traders, they are making a big move, or the traders are already taking positions. That we can easily identify by the type of moves they make it in the market. And from today's Investor Today has an article or intervention. Okay. In DDPD, what is your view on Australia? Australian dollar is expected to very soon come below the parity. Earlier, I said that a lot of criticism happened. Subsequently, it went up to 1.10 and dropped in just a matter of 3-4 days below parity. And they are expected to bring it below parity and start trading. And probably during the drop, we could find a support around 0.88 area. And all the currencies which are undergoing the multi-year moves like USD Yen, USD CHF, Australian dollar, they are expected to come to normal levels, what they have been around 2002, 2003 by next month. These are all nothing but the statistical derivations. We have to wait and see whether it happens. My hedge order was taken in and the pair inverse. At what point should I close? When a position is hedged, immediately you have to watch the hedge, whether it is making profit for about 10 to 30 minutes. The hedging is not making profit, you try to close it with a nominal loss. And once it is making a small profit, try to see that whether you are able to close it with a profit or just keep stop at entry and close it. That way if you do it, the damage will be very less. But immediately you have to keep another hedging order to limit the risk to 30%. So this risk management is very important in trading. At no point of time you should be able to expose your position without a hedging, in case if the hedging facility is available in the trading platform. And Rogers, how do we identify these moves in the chart? Stop, false move, extended move, intentional move? I request you to go through my trading system webinars, which are given there. The type of moves are explained. So in the chart, in case if you are doing it, go in for a 5-minute chart and try to see for 30 minutes what sort of move is happening. So for example, stop and you know that initial high, you can just make a note of the line of the code page and draw a line around that, against that, till the current market level, and see whether they go above that. And once they go above and in less than 30 minutes, if they come below that, you know that they have made a stop. They come up to the high and then reverse, then it is a false move. If it is an extended move, they go above that of the high and stay there for more than 2 hours and then start making the slide below that of the initial low. Then you find it is an extended move when they stay above there for more than 30 minutes to 2 hours. And in the case of the intentional move, they slowly make a slide and without retracing. And that is an intentional move, or a slow gain is also an intentional move after a quick downward move. If the extended move is a quick downward move, then the intentional move will be a slow gain. And if the extended move, like last week, Friday, an upward move, then they are expected to make the intentional move on the downside So intention move can remain for about 2 sessions and the start of the third session. So now you can incorporate it in the chart and find. Then repeat it. What is your view on USD SGD? I'm not expecting much drop in the case of. There might be intraday downward move, but they are expected to gain the levels in the case of USD above 1.2. So no more questions. So let me go back to the PowerPoint presentation. So expected market move for today. Swing and firm up move during the Japanese session. They made a brief downward stop in the case of euro and they have come above that of 1.4362. Can you understand? Then GBP they made a brief pause move up to the double low and they are firming it up again. And USD they made a downward stop and they are gaining the level. And Japanese yen they are not doing a downward or an upward stop. And Canadian dollar also no breach of the low or the high, and Australian dollar also no breach of the high. So in euro and GBP and CHF they are making a little bit of move and a small firming up move and a drop or the expected move during European session. US session swing and firm up moves could be seen as a weak beginning false move, and afterwards you could come across visible slide happening in the market, and that will be able to explain to us that they gained the levels and made a higher level consolidation, start the wide range swings in order to build the positions again. Whatever they have taken the sell, they book profit and re-enter in the market at a higher level, thereby their sell level value goes above that of the market, adding the profit. Then afterwards they start selling at a lower level in order to drop the market. So it might appear as per chart, etc., the market could go up, but my forecast algorithm says that there is going to be a drop and slide this week or next week, and visible drops could be seen during the month of September, and we could come across those currencies like USD, USD, CHF, Australian dollar undergoing the multi-year reversals or come to that of the normal trading zones, what we have seen in the case of 2002, 2003 by next month. So with regard to the initial lows and the highs, I explained that they breached the low by about 4 pips in the case of euro and they come above. And GBP they have not breached the low even though they came close to that. And CHF they made a downward stop for about 8 pips and then gained the levels. So they are all stopping to gain up to that of the high at least. Then USD they have not breached the low or the high. Then Australian dollar also they have not breached the low or the high. Even though Australian dollar they came close. Canadian dollar also they have not breached the high or the low. So these are all the conditions you come across currently. As the market moves during European session, you could come across more volume coming in. And there might be a lot of data release and speech, etc. That's part of the game. So in between, you'll come across the moves happening in the market, and some may say that the USD is expected to weaken, some may say that the USD is expected to strengthen. So alternative views are expected to be there in the market. We cannot avoid it. So it doesn't mean that somebody is right, somebody is wrong, etc. You will come across ultimately the expected market move, what has been derived by my forecast. That's what I can suggest. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. And again, I'll come back by tomorrow and review the market and explain to you the expected market moves and also track it for you. In the meantime, I'll also post it in the blog for your help. Thank you and all. See you tomorrow.